Two people, same country, same IRS. One person works a corporate job, making $85,000 a year. Taxes are removed before they even touch the money. The other person made $400 million last year and somehow paid a lower tax rate. The employee paid around 20%. The investor, around 8%. Wait, how does someone making more money pay less tax?
Now, tax besties, this is exactly why the tax fairy exists. Because most people are not losing at taxes because they're lazy. They're losing because nobody ever explained the rules in plain English.
I'm the tax fairy, and over here we help you work magic on your money by spilling the tax tea.
Breaking down the money moves and showing you how the tax game is really played.
And today, we're breaking down why rich people barely pay taxes and why it's usually not because they're hiding money, cheating the system, or doing something illegal. It's because they understand how income, ownership, timing, and strategy work inside the tax code.
By the end of this video, you'll understand why W-2 workers often pay more,
why investors can legally pay less, and why some people make six figures but still feel broke. Not because they don't work hard, but because they were never taught how the tax game is actually played.
Here's the tax tea nobody explains correctly.
The IRS did not create two different tax systems. Rich people just learned how to play the game differently. And the craziest part, most of these strategies are completely legal, not secret, not underground, public. If you earn a salary, you are earning the most heavily taxed income type in America. That alone changes everything. Federal taxes, Social Security, Medicare, state taxes. W-2 income gets hit from every direction before wealth building even begins. Now compare that to someone earning income from ownership. Stocks, real estate, business equity, different rules entirely. This is the part most people miss. The tax code rewards ownership more than labor. Read that again. Ownership more than labor.
This is why doctors, lawyers, and engineers can still end up paying more tax than investors.
High income does not automatically mean tax efficiency. And this is why so many high earners still feel broke. Because nobody taught them the difference between making money and keeping money. Now let me show you one of the most powerful tax rules in America, the step up in basis. And honestly, most middle-class taxpayers have never heard this explained properly. Someone buys stock for $1 million. Years later, it's worth $50 million. That's a $40 million gain. If they sell it, massive capital gains taxes get triggered. But wait, here's where the rich play differently. If they hold the asset until death, their heirs receive something called a step up in basis, meaning for tax purposes, that $40 million gain disappears. $40 million, zero tax. And yes, that's legal. This is the type of tax tea that changes how you see money forever. Wealthy people focus on holding assets. Most employees only focus on earning income. Huge difference. Now let's talk about the strategy that completely breaks most people's brains. Buy, borrow, die. Selling assets creates taxes. Borrowing against them doesn't. Read that again. A wealthy investor can borrow millions against assets without technically creating taxable income. No sale, no realized gain, no tax trigger. And this is why so many middle-class families work for decades, yet never build real wealth momentum. They're taught income, not an asset strategy.
Now let's spill another piece of tax tea.
Real estate investors can sometimes show losses on paper while collecting real cash. It's called depreciation, one of the most powerful legal tax tools in America. And most employees have absolutely no equivalent to this. The property may actually be increasing in value, while the investor legally reduces taxable income on paper. Wait, do you see how different this tax game is? Employees and business owners do not get treated the same under the tax code. And most people don't realize how big that gap actually is. Business owners may qualify for something called the Qualified Business Income Deduction, up to 20%. Employees don't get access to this at all.
And this is important. This isn't only a billionaire tax strategy.
Freelancers, creators, consultants, small business owners. These rules can apply at your level too.
Now let's talk about something most people misunderstand completely.
Charitable giving. For wealthy people, it's often strategy and generosity. Instead of selling appreciated stock and paying taxes, they donate the asset directly, avoid the capital gains tax, and receive a deduction. And one more thing people misunderstand constantly: tax brackets.
Most people think if I move into a higher bracket, all my income gets taxed higher. No, that's not how it works.
This misunderstanding literally causes people to fear raises, fear over time, fear growth, because nobody explained the system correctly. But here's the real tax tea. The biggest advantage isn't the tax rate, it's the team.
Wealthy people don't think about taxes in April. They think about taxes all year long.
Most middle-class taxpayers are filing taxes in survival mode, reactive, last minute, stressed, not strategic. And honestly, this is why some people make six figures and still build no wealth. Because income alone is not the game. Strategy is. Remember those two people from the beginning? The employee at 20%, the investor at 8%. Same IRS, different understanding. The rules are public. The strategies are learnable. And the tax tea? Most people hear it too late.
Open the business account. Track your deductions. Learn the difference between labor and ownership. Start thinking about taxes before tax season.
And if this video opened your eyes, comment strategy. Don't forget to subscribe to the Tax Fairy with Miss T. You won't want to miss the tax tea. Your future self will thank you.